honey-do list kind of an outdated notion, by the way? We were just having a whole discussion. I mean, you still need help around the house. I'm jumping ahead, but talk us through what you think these lasting consumer trends are.
Yeah, well, I would divide them into three, and these are these mega spending shifts that we've seen since the beginning of this pandemic. First, channel share shift. Picture this: about 16% of all U.S. retail sales is done online. That means 84% is still in store. In this short period of time, we basically are jamming that 84% into that 16% channel. That's part one. Part two is where you're referring to this honey-do list. This is the wallet share shift. We're sitting at home more. We're staying at home, we're eating at home, we're working at home, things are breaking more. So the more we sit around, the more we reflect that we need to do things in our house. Average home value is around $300,000. Depreciation is around $6,000 a year. This seems like a pretty reasonable activity to do while we're stuck at home.
Absolutely. So, I guess we have kind of the usual beneficiaries, and then I'll let you get into the third one, which is about scale and the big getting bigger. But let's stick with this idea of fixing up your home for a moment. Home Depot, these stocks have been some of the best performers, but are lagging a little bit in the market today. I mean, how much of this is already priced in, and how much of this is going to be truly lasting?
Yeah, I mean, look, I think a lot of it is priced in. I think the market in general is already looking past 2020 earnings, and they're looking towards 2021. We know this year is going to be a little bit aberrational, given some of the trends and closures and reopenings, et cetera. So right now we're pricing in pretty good recovery in 2021. That's reasonable, right? The other side, for a pretty good sector that's had pretty good pricing, you have pretty big scale players, that makes sense. That being said, there is more of a premium for these scale winners, right? The big getting bigger, you're starting to see separation. So it's somewhat in the good news, but I think investors seem to be taking this barbell approach. You still want to be exposed to some companies that have this cyclical penetration, and I think that's where Home Depot and Lowe's come into the picture.
Would there be other kind of more surprising names on your list that could be beneficiaries from some of these trends you've mentioned? And where does Walmart fall? Yeah,
so look, Walmart, I would put them in the ultra defensive camp. I mean, that was the stock up phase of this crisis, and that has generally been the safe trade. They're also benefiting from the scale trend, and I think that was the theme of their earnings this quarter. Is that they're gaining new customers at a pretty rapid rate, and they manage their profitability relatively well. Not everyone wants to still own companies that sell a lot of food. I mean, at some point, we're going to switch from all the stocking up and staying at home to more of the cyclicals, but Walmart, fits pretty well into that paradigm.
And who else would be on your list, and what kind of names would you avoid going forward?
Yeah, so in our list, I mean, we're bracing for the next couple of quarters being pretty difficult from a consumer perspective. And that's, once some of the stimulus wears off, some of the unemployment insurance wears off, in theory, we're going to be in a recession. I say in theory because some of the sales results have been pretty good so far from some of the companies in our space. The names that we think are defensive and a little offensive: auto parts, a name like AutoZone. A name that's more defensive but has good top line and margin growth, we think, is a Dollar General. Walmart, as I mentioned, being barbelled on the safety side, and then looking out, over the next 12 months, a Home Depot and a Lowe's.
Well, it's funny you mentioned AutoZone. We were just talking with Dom Chu about he's trying to change his oil, and the line for AutoZone was out the block. Simeon, is that what you're referring to?
Oh, yeah. I think, I think you can carry over this honey-do list to some degree to your car, right? It's something that either you can do outside your house, it's something that you can do outside one of these auto parts stores, but fixing up these highly depreciable assets, and as we all know, our home and our car tend to be number 1 and 2 in that order of things that need to get fixed. We're not driving our cars as much at the moment. Miles driven looks like it's around down 20 to down 30. But during downturns, we typically see people don't buy new cars as much, and then the existing car fleet tends to age, and we have to spend more money on our existing cars. Yeah,
well, I can tell you I've seen more car tinkering and car washing on my block in the past week as the weather has improved than in all the past several months. Simeon, thanks very much. Really good insights. We appreciate it.
Thanks, Kelly.
Simeon Gutman is the retail analyst at Morgan Stanley.